You're watching today's video technical update presented by FX Times. It is Tuesday, April 13th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. The markets settled a bit after the opening gaps this week. I will follow up on the dollar, Japanese yen, pound dollar, and the Aussie dollar pairs. This video is being produced at about 2 p.m. Eastern Time ahead of the US session close. Starting with the pound dollar pair, first of all, we should note that the pair is in a bearish mode overall, but there are some bullish attempts that might be showing a reversal possibility. But even in that case, it's within the context of this triangle, and the most we could target at the moment is 1.58, or the 61.8% retracement that's coincident or confluent with this declining trend line. However, at the moment, we are still waiting for this confirmation. You see the market broke above this resistance to start the week, actually gapped up above, but came down to test it. So today we're testing that and seeing if the market can continue this the rally. As far as momentum goes, it's at the RSI is at 60 or near 60, so it's still within this bearish range below 60. So there's no strong indication of a bullish attempt yet. Let's take a look at the 4-hour time frame. Here is a possible second leg to our current correction that would bring us to 1.53. The gap doesn't really matter anymore. It's closed the gap, so if the gap actually supported the market and the market continued to rally, that would have been a very strong bullish indication. But at the moment, that's irrelevant, and we're just waiting for this correction, this ABCD two-legged correction to complete at 1.53 and see if this former resistance can become support. Then if a rally ensues from there, then we would be aiming at the 1.58 area. Otherwise, if the market comes down, then this is just a clear out action, and it should test 1.48 in the next couple of swings. Okay, so that's it for the pound dollar. In the short term, look for this correction to see if there is any bottoming action at 1.53 to decide your outlook, whether it would be bearish or bullish. Here's a look at the dollar Japanese yen pair. Recently we have very strong bullish indications, and here's our first official throwback. So if the market does bottom out here, above this previous high here, probably around 92. So the market's at 93.15 area. So if the market bottoms and rallies, then we have confirmed our bullish outlook in the intermediate term. Now looking at the 4-hour time frame, we see that the market is in the triangle pattern. It started the week gapping below a little bit, but immediately the market filled that gap, but could not break above this declining trend line, declining resistance. So the market sort of just continued, and now today we had a little breakout on the bottom, but it was not confirmed, and this is just a clear out. So that actually is a strength formation showing that we might actually break above instead. Now the market is converging, and in the Asian European session we will definitely see the market break out. Now because it's at the apex, it's probably more important to see this breakout, because the market can continue to be sideways and still break above. So if the market is to be bullish, it needs to break above this previous high here, around 94 or 90, around 94. So look for the market to break above 94 to confirm your completion of this throwback and possible continuation of the rally. And that rally, if we look at here, we may go up to the 98 area for a short-term projection. Short-term target is at 98. Here's a look at the 1-hour time frame, and we see a possible double bottom, but again it needs to break above. Actually, in the short term, we see it needs to break above 93.50. But eventually, this is the what you want to break above really 94. 94 is more of a psychological resistance, but 93.80, 93.75 is the technical resistance here. And if the market breaks above that, and you see, it would be coincident with breaking above the 100 period moving average in this hourly time frame. So the bullish outlook is to be confirmed very soon, and we should see this in the upcoming Asian and European session. Look out for this confirmation of bullish continuation towards 98. Turning to the Aussie dollar now, here's the daily look, and you see the market testing this previous high at 0.94. 0.94 at the moment is holding, and we have this big engulfing pattern to start the week because the market gapped up but closed that gap immediately. Okay, and today we have very indecisive action. Looking at the 4-hour time frame, we see that the market broke below this rising trend line and is basically testing the 0.9250 area, which is an important resistance here, and now it's testing it as support. You see the market actually break below a little bit, but the inability to sustain another close below shows that this could be clear out action. The market could rally, but here's what we should do. We should adjust this support to a more closer resistance level of this consolidation right at 0.9220. So instead of using this previous one, we should use a closer one. And now we have this matched as support, and now we're testing this as support again. It's holding, so the market may rally. Now here is another scenario. If the market cannot rally above 0.93, what we would essentially have is another shoulder, and that would be a head and shoulder. It's still early to anticipate that, but we can still anticipate the development of this, and we could act quicker if we can anticipate price action. So right now, if the market cannot go above 0.93 and there's a bearish candlestick coming down, or if the market sort of consolidates here at 0.93, it's and between the US and Asian session, there's not likely to be a big move. So when the Asian session does start and continues into the European session, if the market shows a bearish attempt that breaks below 0.9220, then we may be at a reversal. And looking at the daily, a reversal first would test this 0.91 area. So there's some, we are going against the the bearish outlook is against the established trend, which is bullish. So the targets have to be conservative. You should not expect the market to definitely come down to test this previous low here at 0.86. Instead, anticipate it to travel to some retracement level. Here, the 50%, 0.90 area looks like a very important support. So if the market does get down to there, you may want to start reconsidering the bearish outlook for the market can be supported here and continue rallying. So right now the bearish outlook is very short term and may go to 0.90 with 0.91 as a first maybe temporary support. Okay, so look for this head and shoulder to complete to give you that outlook. And that's all for the day. Check out fxtimes.com for other technical and fundamental analysis as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.